Is mining the next big trading or investment opportunity for second half of 2024 and 2025, or should we wait a little bit more? In this video, we're going to explore the opportunities that we have been seeing into ASX material sector, especially the leading companies like BHP, Fortescue, Rio Tinto, and other ones that we're going to be looking into this video as well, one by one, understanding the exposure we would have by holding those stocks, also looking to the yield and seeing what is the prospect for iron ore prices going forwards through the second half of 2024 and going into 2025. So let's have a look. My name is Les, I'm Chief Analyst of BG Trading in Australia. Today is 2nd of July 2024. We have just started the new financial year, and obviously we're looking at for trading opportunities. And that's one of the reasons we are looking to material stocks, because we see value on those material stocks. We're going to see through this video why we see value one by one. Remember, this is not a financial advice, it's just sharing the way we trade using BGS20 together with our VP members to know when to buy and when to sell, to chase 20 to 40% within 1 to 3 months at a time, and setting stop losses of average 5 to 12%. So that's how we trade here at BG Trading. And generally what we do, we choose stocks that are trading at technically discounted price, buy stocks that have good outlook and potential growth. Let's start with our view, pretty much the outlook for iron ore, because most of the companies that we're going to be looking at are highly exposed to iron ore, except for S32. And then it's important to understand that iron ore price currently, if you look into iron ore prices, currently 106 US dollars. And then it has been, if you open the chart formation for iron ore, you can see here, has been pretty steady, but generally relatively strong historically. If we go to a weekly data, for example, so we can see that it's sort of steady into reasonable level here. Ideally what we wanted to see iron ore prices, if we are investors, we want to see anything above 100 US dollars, and that's what it is at the moment. The trend is still sort of an uptrend, which is good. Multiple higher lows here, which is sort of constructive as well. The outlook for second half of 2024, according to analysts, is to be in between 110 and 120 US dollars per ton. So if iron ore remains in this type of level, I'm very confident that all those stocks trading at technically discounted price are currently offering value going towards the second half and 2025. Now that we discussed about iron ore prices, we want to start with BHP, and I'm gonna just start the chart formation. If we been following us long enough, you know that we use a BGS20 strategy, which is a very simple strategy, which I recommend you to learn through our online trading course. Just go to bgtrading.com.au. But the bottom line is a very simple strategy that allows us to know whether the stock is trading at what we call technically discounted price, or at technically fair price, or at formal levels. And obviously we wanted to avoid buying stocks, not just stocks, but anything really at the formal levels, because we don't want to overpay for a particular asset. So stocks exactly the same. So essentially what we do, we draw this you see one of the indicators, which is the long-term moving average. You see this pink line here? Okay, ideally on this pink line, we want to be buying stocks, high-quality companies that are paying dividends, and even if you're gonna be trading like more speculative stocks, you still want to do the same. So you want to buy those stocks at when they are trading under this pink line, not above, because above brings to a very expensive price. And if you look historically, those stocks they only move so much within that range. But we see in BHP, for example, at the moment we see almost like a 20% range, about 18 to 19% range. If eventually BHP goes to $50, tries $50 again. So this is an ascendant long-term trend. As you can see, works as a support line as well. The RSI also looking constructive with multiple higher lows here, and that suggests that we could see a bounce back up again of BHP, and at least testing this hypothetical resistance level of $45 to $46, which if you really look into short term, that's what we could be exiting there. But if you're looking for the long term, and there's nothing wrong with holding this particular stock for, I want to say long term, as actually you want to say a mid term. There's nothing wrong holding this stock for more than 3 months. As the company pays relatively good dividend. So I say looking for midterm is sensible to expect that the stock could reach $50 again, and that will be the ultimate exit point buying the stock at this current level. Like anything, we always recommend to put a stop loss just in case you have to protect your capital for the short term. But for the long term, if it hits the stop loss, I would probably, if I'm able to hold for long term, I'll probably even buy more BHP and sell at $50. Okay, look. The risk here is really to do with the price of iron ore here. Okay, so I have put together this analysis as well. It's comparative analysis for all those material stocks, and as you can see here, BHP. If you buy BHP, you essentially have exposure not only to iron ore, as you can see here, but also to into copper, a little bit coal, and nickel as well. So that is what BHP is offering at the moment. And then at $43, you'll be looking at 4% yield, return on investment with the last two, the interim and the full year dividend that we had, the last two, from the last financial year and from this first calendar year as well. So you just gotta make sure you know that past dividend doesn't mean that's going to be reflecting the same dividend in the future. So what we're looking at 4% yield here could be even higher or even lower within the upcoming dividend payments. So you just gotta keep that in mind. But essentially, if you look at the historic data for BHP, the dividends has been ranging just under $1 for the last three payments. But before, when the iron ore prices were higher, then the dividends were quite substantially. But a lot of institutional investors find value at those stocks at the current level, and then it's just a matter of time. If you have economic stimulus again in China economic numbers start improving, and then obviously that's when we see iron ore prices and all those stocks going up again. I just want to remind you, the idea of this channel is to trade, not to invest for long term. So that's my view is short to mid term here. So I want to be looking at, if I'm buying BHP, even be looking at locking 6% at $46 or 18% at just under $50. That would be the ultimate goal. We've done two trades here with BHP already. Obviously, we're looking more than 7 to 8, 9%. But when we're trading with large caps, we have relatively low risk. but it's still some reasonable side swings, and then this is a good stocks to leverage as well. Although I don't recommend anybody to leverage. So this is BHP. Entry opportunity as we speak, according to this chart formation. Now the next one we're going to be looking at is Rio Tinto. So Rio Tinto, as well as BHP, if you look into long-term chart formation, it is trading a technically discounted price. Once again, under this pink line. The long-term trend is ascendant, which is positive as well. So you want to be looking into stocks that have ascendant long-term. And the trading range here is essentially not as good as BHP. All right. So we have in here what we call, some of you guys can call like a double top. So you just gotta be careful. Double top formation sometimes suggests that we could see a potential another leg down here, and then I would say that buying BHP around between $100 and $110 around this type of level here would be the ultimate entry. Sorry, buying Rio Tinto in between $100 and $110 would be the ultimate entry point. So I think for Rio, I would be waiting a little bit more. Obviously, Rio is outperforming the other companies because if you look into the fundamentals, Rio is still keeping its profit pretty steady and paying more dividends than in the other years. The interim dividend in FY24, if you look at $3.92. Look at BHP, for example, was lower than the previous years. So it's decreasing. BHP has been decreasing its dividend payments. Maybe we have a final dividend larger than we expected, but it doesn't look as good as Rio, and that is directly reflecting on the chart here. But the bottom line really is that they can change anytime, and then you really gotta play. If you want to play for the long term, then that's what you play for, dividend long term. But for trading, you want to find stocks that has fallen the most and offering most value. So the yield at the moment for Rio is better than BHP. It's $5.42, trading $120 a share, with iron ore prices currently at just under $110 a ton. Okay, so here, if you interested to have the link, I have put the link actually into our Facebook community, Buy Grow Sell Strategy for share traders, so you can have access to this particular analysis here. So if you don't find the link, just put it in the comments and we'll send you the link. But essentially, there's a comparative here of yields. For example, BHP 4% yield. That doesn't include franking credits, okay? I'm not going to go into detail what franking credit is, but it doesn't include franking credits. If you are to include those credits, then the yield will be even better. But look, 4%, then Rio 5%, 5.42% is better than real estate at the moment for the yield. Not talking about capital growth. So when you look into buy for capital growth, you really need to buy a technically discounted price. So Grange Resources also offering really high and compelling yield, and Fortescue offers the best yield, like almost 10%, incredibly high. Now, whether they're going to keep this yield at this level, I'm not sure. Generally, the share price moves down, and that because the market's sensing they will cut yield. But anyway, let's go to Fortescue now, FMG. So if you're looking at FMG, offers the best trading range at the moment. If you think that FMG could go try $30 again, which I think will, as soon as we have iron ore prices bouncing back, then we would have 30% potential bounce here with the stock trading at technically discounted price, long-term moving average also in ascendant mode, as you can see there, and this breakout towards to the RSI looking a little bit weaker has been bouncing back. You could see a strong bounce, but obviously depends on what happened with what happens with iron ore prices right now. But if I was to buy Fortescue, I would certainly be buying now at technically discounted price and avoid buying when the stock's trading in a greater distance from those this pink line here, like it was back in early 2024 when the stock was almost like $40 a share. So it's just $30 a share. Just gotta be careful, and that's another stock as well as BHP that is currently offering a very decent entry if you're looking to short to mid-term, and if you believe that we could see a bounce on iron ore prices. Okay, everyone has its own theory. It's always hard to forecast what's going to happen with commodities, but one thing we can do, we can buy high quality stocks like this at technically discounted price. This is under our control. That's the only thing we can control, and that's why I'm bringing here in this channel for you. Let's move to next one, which is a smaller cap, Grange Resources. We've been trading this stock. Recently has fallen our stop loss and then bounced back really quickly. So that proves again, when you have high quality companies, like this is more, it's not as high quality as BHP, but when you have companies that are doing fundamentally well, they sooner or later will bounce back. I learned this years ago. But you have to have a patience, okay? The idea here is, if you're going to look into Grange Resources, and let's take a look here into the analysis. Essentially, if you buy Grange Resources, you have full exposure to iron ore, which is produced into project in Tasmania here in Australia. So no geopolitical problems with that particular stock. The yield is really good, at 37 cents. It's paying 5.41%, like 2 cents a share. I did receive dividend last time we trade, which is good. So I trade exactly at the time that we were about receiving the dividend. So I got a check, $1,000 at home. It was really good. Some of them, our VIP members, also received a check as well. Well, you got to just bear in mind that if iron ore stocks falls again, then this are the stocks that tend to fall the most. Okay, it's small caps, but offers the greatest trading range of them all. So in fact, if it goes back to 50 cents, you're looking at 34% return right here. In this case, I wouldn't be buying now. I would wait a little bit to see if there's a pullback, because this hypothetical support was broken a little while ago right here, and what was once a support, it has become a resistance, which means we could see some seller pressure around 39 to 40 cents a share. So just keep that in mind. If you buy now, wait a little bit. We might have a pullback here around 35 cents, and then that's where I would be looking at buying this particular stock. Fundamentally, the company is been doing pretty well. As you can see here, it's profitable. We want to see still what's going to be for full year result in 2024. But according to the first half of 2024, it's likely to keep the profitability around $150 million. We still wanted to see the second half. Whether it's going to pay another dividend, but most likely not. But if eventually Grange Resources pays another dividend because the margin, the profit goes, say hypothetically, towards $200 million, then very likely they will pay another dividend here. And that, if that happens, then that's when you're going to see the share price moving quickly, moving up right quickly. So yeah, I like this particular stock, to be honest. Unfortunately, we traded many times, but our last trade we had a stop loss of 37 cents. We got knocked on the 37 cents, but you know, we wanted the risk before the end of financial year anyway, so we took a stop loss. We could have bought back at 32 cents, but we didn't buy back. So we still we holding positions in iron ore stocks, but not in Grange Resources as we speak. So, but if you're holding position in this, it looks positive to me. But to buy more or to get into this particular stock, provided that we have hypothetical resistance here, just we wait a little bit for potential pullback around 35 cents and then bing, buy that back. Market's offering opportunities in this particular sector at the moment. I think it's undervalued, okay? So it can trade in potentially many stocks. Obviously, remember, this is not a financial advice, but it's up to you, really. You gotta make sure you do your own due diligence and talk to people that were able to give you financial advice. Now, the last one is S32. S32 has been doing really, really well, actually. It has fallen the most. We posted a little while ago, this would be the buying area. The stock actually reached the buying area, and then ever since it reached this sort of under $3, it has risen really well. In fact, if I measure this up as we are looking at here, there was 40%. There was 40% rally. That's pretty good rally, only from March to May, and then we have this correction here. But it's keep its relative strength above the other ones. So this is a good stock to look at. Now, whether the best time to buy was before, when the stock was trading under this pink line. Ideally, if I was going to buy this stock, I would wait to fall. If it falls, and I mean in the short term, sooner or later will fall. If in the short term falls under this pink line, that's why we would be looking at buying. Looks strong here for the candles. Heiken Nash candles looks is green, bullish intersection level 2. But I think there's more value into all these stocks. Another thing is the yield is not as good as the other ones that we've been talking about. But remember, this is material stocks, but it's not iron ore company. Okay, so it's generally the S32 operates in aluminium, coal, manganese, nickel, silver, lead, and zinc. It's a very well diversified company, and sometimes the projects are generating really good margins, other ones not really good. So, but it's well diversified. So, you're looking for a greater diversification. Maybe look for like Soft 32. But I wouldn't be buying Soft 32. The stocks I would be buying now would be of Fortescue and BHP, and waiting to buy Grange Resources at if it falls around 36 cents again, and Soft 33 if it falls under 340. Like under 350, I think looks reasonably good to buy, provided that we have this relative strength in this particular stock. Well, this brings us to the end of this video. Let us know what you think about all those stocks that we have discussed. Do you think this is an opportunity? It's not an opportunity, should wait. We know there is variation that depends on iron ore prices, most of those stocks, and the Chinese economy as well. I'll be open to answer any questions. Hope you enjoy this video. See you in the next video. Bye.